thank you for joining the Nairametrics inaugural Nairametrics Tech Fireside Chats, where we'll be having a conversation with Uwemakpan. Hope I didn't murder your name, Uwem.
Yeah, you got it right. At least you tried.
I got it right. Yeah, thank you so much for joining us today. I'm Adetayo Adeshola, and I'm also with Janet John, who is a tech analyst here at Nairametrics. I head content and strategy at Nairametrics. And so it's a pleasure to meet you, Uwem. But maybe can you give us a bit of a background to your journey to tech? So like, who is Uwem?
I would say that I've always been in tech. At a very young age, I was taking apart our TV in the house and putting it back. I was breaking things. I was getting into a lot of trouble. And but then,
Yeah.
I had that passion for electronics, and so that's what I studied in university. But as you know, with the Nigerian educational system, you go in, with so much belief and vigor for a particular industry, right? And then you come out of it and realize that, oh, this is not where the money is, or this isn't what I want to do. But in spending 5 years in Covenant University studying electrical electronics, I was still drawn into the IT space. Then I was building our website. I taught myself to build our website with Dreamweaver. For those of you that I taught myself how to use Dreamweaver. Yes, many years ago. I was fixing people's laptops and stuff in school. I was making quite a good sum of money from it actually, because it turned out to be a business for me. That's how I was supplementing my pocket money. But I didn't really see it as a career for me till I graduated, and then the government changed the NYSC policy and said everybody must teach. And I'm like, you teach. Mind you, my mother taught for over 20-25 years in the Ministry of Defense. And so I didn't want to, I know how teaching is, and that life is not something I wanted to get myself involved in. And interesting, my mom said, you will never be a teacher, like never. So during my NYSC days, instead of teaching, I signed up for one of the federal government programs, that taught people skills, right? And part of what I was doing was learning how to build websites and softwares. And so that was my indoctrination into the tech space, right? So in that period, I learned how to build websites with Drupal, with WordPress. I was learning the basic, C language. I was learning, just basic CSS and all that. But that was my indoctrination into the IT space. And it was from there I got my first job. I got my first job by just an interview like this. And this was many years ago. The guy owned the company in Nigeria, but stayed in the UK. And he was like, "Oh, I like you. I like the way you talk. I like your vision for the company. You know what? I'm going to employ you." And interestingly, the amount he was paying me was way more than someone that had a master's degree from University of Manchester. But he never knew. The guy never knew until I left. Anyways, that was my first foray into IT. Then I was managing teams in India. So we had the developer team was in India. We were in Nigeria. The boss was in London. So you can imagine managing up, down, back, forth, everything. But we're building out projects for clients across. Yeah. So, and maybe that's why I've always loved remote work. I honestly hate offline work. This is just anyways. And so from there, I then got my first breakthrough in my IT career, and I interviewed at Hairs Holding. I don't know how many of you know Hairs Holding. They're Tony Luminous company. Met him. Interestingly, too, that the day I met him, I was wearing a pink tie. He was wearing a pink tie. He was like, "Oh, we connect." And so I got employed into the company, and I was in the IT department. Sure, I started out in the marketing department because I was managing the website. Then went to the IT department. And the beauty of working there was that I had to manage across the group of companies. So you had Avon Medical, you had Avon HMO, you had United Capital, you had a broad range of companies, and I built up my experience. But I would say my love for IT and everything I do right now happened when I transitioned from Hairs Holdings into the Tony Luminous Foundation, where we built the program that you see run at today is $100 million endowment fund to train Africans across the African continent. And in 5 years, we have trained over 10,000 entrepreneurs and funded their businesses. That was where I would say that was my, would I call it an ambition? That was when I really knew I was, in that IT space, because I was, we built out the platform. We did so much to bring that program to game.
Okay, yeah, that's really impressive. I like the way, you broke it down from how, you started like many other Nigerians, especially at this day and age, started from like, building websites, moving on to, leading teams, then moving on to Hayes Holding, then, kind of now moving on to the Tony and Foundation, which kind of almost introduces what you currently do now at Ingressive
Yeah.
Capital. So what is
Yeah.
Ingressive Capital, and what role do you play at Aggressive Capital?
Ingressive Capital is a venture capital firm. I would imagine that the listeners know what a venture capital firm is. And we operate out of Lagos,
You'll be
but
surprised though.
we are targeting, our people are experienced, we are targeting um, entrepreneurs and innovative founders across sub-Saharan Africa. So if you're looking in our portfolio of companies, we have companies from Nigeria, which forms a core, most of our investments. We have from Ghana, we have from Kenya. We're closing a deal in Egypt in the next few days. We have over 20 plus portfolio companies, some of which we have heard, some of which we're going to hear about. We're one of the first investors that will check into Paystack, and we exited last year. A lot of you know the story of the Paystack. We're investors in TZT, we're investors in 54G, which is doing amazing work in the genomics department, building a data bank of gene pool for Africa, because every time we scream about Africa not being represented, good of being represented. Now this is a company that is doing that in the medical space. We have companies like Kwaba that is democratizing access to capital for rent. We have Evolve Credit that is doing a lot around giving you access to cheap and affordable loans. We have Cozy from Ghana that is like your business coach in your pocket, targeted at SMEs. We have a company called Jetstream. If you know of Flexport, Jetstream is like the version in Africa. We also have one in Nigeria called Send that basically does the same thing. So handling that logistics space, making it seamless for you. We have Seamless HR, a software as a service HR platform that's expanded from Nigeria to East Africa, right? So if you look at our portfolio of companies, we are very deliberate with the kind of companies we invest in, because we want to ensure that these companies have access to a billion-dollar market, can scale appropriately, and would positively influence their home countries or the home communities that they operate from.
Yeah, I mean that's really impressive. I mean, like a really impressive list of companies that Ingressive Capital has invested in and supported, with funding. So basically, what is your take on the tech ecosystem in Nigeria and Africa as a whole, and how does that align with your vision for Ingressive Capital?
We can't run away from tech. Tech is an enabler. I always tell people, tech is not necessarily software, right? That's always people make that mistake a lot. Tech is not necessarily software. Tech is what. But I will not go into what my definition of tech. But I totally believe that tech is an enabler, and that's why you cannot ignore the integration of tech into whatever you're building. If you're going to scale, if you're going to reach the undeserved and underreached and all those fancy words people use, if you're going to actually make impact, you cannot discount the relevance of tech in what you're building. And I mean, how does that play into what we do at Ingressive Capital? We believe that tech helps you scale, helps you deliver services faster, better. Helps you deliver services more affordable in a more affordable manner. Helps you lead a lean team, because as a startup, you cannot just recruit everybody. We just talked about working remotely. That's tech for you. Tech helps you do that efficiently. Tech helps you produce more from less, right? And that's why we believe, if you look at all the companies we've invested in, tech is a core component. It might not be a product, but it's a core component of what every founder in our portfolio is using or is building, because tech is totally an enabler to build a business that is sustainable on the continent.
Yeah. So at Ingressive Capital, what role do you play specifically?
So I lead operations at Ingressive Capital.
Okay.
And thinking back, I've always been, after telling my story, you see that I've always been leading teams. So consciously and unconsciously, in TF, I was leading the internal team, and I was always leading thousands of entrepreneurs across Africa. So, anyways, back to Ingressive Capital. I lead operations, so the day-to-day operations of the company. So we're talking about basic admin stuff to deal flow management and meeting new founders and discussing with them, interviewing them, or listening to them pitch, as well as portfolio management and basically managing the companies that we've invested in. We absolutely believe that access to capital is important, but there are so many other things that founders need. So after you've gotten the money, what next? We've heard so much of founders that have raised money and failed in months, right? So at Ingress Capital, portfolio management is a core to what we do and what we want to how we want to influence the ecosystem, and that's something that I'm leading.
Yeah. Thank you so much, Uwem. So, Janet, you want to weigh in here? I mean, women has said a lot about, what Ingressive Capital does and his journey into the tech space and what he's doing now. What do you think, Janet?
Okay, that was really impressive. I just wanted to confirm. So, after investing in a startup, are you directly involved in their day-to-day operations? Do you monitor everything they do since it's your money, literally?
Yeah, that's a good question. And various investors have various modus operandi. But for Ingressive Capital, we absolutely believe that control of the company should be in the founder's hands. And we are the founders division. Yeah, in short, we don't necessarily, we invest in the ideas, but we invest more in the founders. We have to believe that you can lead the company. And so because we don't want to run your business for you, we want you to be creative, we want you to do whatever you want to do with your business. So we let the founders run their companies. We obviously need monthly updates to see how well they're performing, how well we can help them or support them, or what advice we can give them to help them become remain profitable and do better as companies. At Ingressive Capital, while we allow them run their businesses, we give them access to later stage capital because we know that after we've invested in them, they might still need to raise more money. We give them access to his brain trust of founders. Like I remember how I mentioned that at Invest Capital, we are very deliberate with the companies that we've invested in. And so we have a pool of experienced founders that literally help themselves and collaborate with themselves. If you look very well at our portfolio, you see each company sort of leveraging on the service of the other company. That's how to build an ecosystem. And that's why we're big on investing the way we invest. We also give them access to business development services where they need them and access to the kind of contacts and industry leaders that they need to succeed. So if you need connections to, let's say, someone in the financial space, we definitely have a connection in the financial space who probably even invested in our fund or our friends. If you need to scale to Ghana, we not necessarily have a unit in Ghana, but we have connections in Ghana that can smoothen out the process. So that's how we support our portfolio companies. We let you run your business, but we support you when you run into issues and need maybe a second perspective of support.
Yeah. Well, I have a two-pronged question, right? So, I interact with a lot of young people and people that are trying to build startups or, solve one problem or the other, especially in the Africa, Nigeria specifically, and Africa as a whole. So, how do they contact, venture capitalists or PE firms such as yours, such as Ingressive Capital? And what do you, from a venture capitalist standpoint, what do you, identify? What do you consider before investing in those businesses?
Okay, very, very good question. So first of all, from the entrepreneur perspective, I would say first do your due diligence on the investor. Not all money is good money. I keep on saying this. I've been saying this when I was in the not-for-profit space, and I'm saying this when I'm in the venture capital space. Because somebody offers you money doesn't mean you should take it. Money comes with responsibility. Are you ready to take that responsibility? So do your due diligence on the investor. And a very good way of doing that is asking people that they have invested in how the VCs are treating them. Trust me, you will get a lot from that. From just speaking to the founders. How is this investor? Is he hands-on? Does he allow me to run my business? What kind of support services do they give me? What value add do they give me apart from the capital? Because remember how I said capital is important, but there are so many facets to succeeding on the African continent. Does that VC or investor or that PE firm bring that to the table? They know what they are looking for. So if it's a VC firm focused on agriculture and you are building an insurance product that doesn't have anything to do with farming or agriculture, they definitely will not invest in you. You're wasting their time and you're wasting your time. So what exactly, what is the investment thesis? Find out what are the things you're looking out for. And don't be afraid to reach out to them. I keep on telling people, closed mouths don't get fed. So if you see an investor, you like the investor, reach out on Twitter and now, interestingly, instead of just, people say cold email people, it's fine, that's good. I receive so many cold emails. I read half of them, and some of them I see them months after. So it can be effective, but it's not the most effective way. The most effective way is to find them where they engage a lot and engage with them. It could be on Twitter, it could be on LinkedIn, it could be at that local bar. Yes, so many businesses get done in bars. It could be anywhere. Just engage with them. It's important that you engage with them. If they are talking about the ecosystem and what you think, you can go back, we can write back or reply them and say, hey, I saw what you said. It makes sense, but I think on the contrary, this is my own opinion. What you said is wrong. Respectfully engage with them. And you will see that they will take an interest in you. And then you chip in your business somewhere, say, that's why I'm building XYZ to solve this. Now you have gotten his attention or her attention. So learn to engage with people. Don't just shoot that cold email or send that pitch there. And then lastly, from the entrepreneur side or the founder side, your pitch deck says a lot about you. So when you found out what the investor is looking out for, when you found out if they are right for you, present your pitch deck in a manner that represents you. Yesterday, I saw a pitch, a landing page. I'll call it a pitch landing page of one founder in Lagos, and I was so impressed. Now he had an audio pitch, he had links to his pitch deck and links to a video pitch. So whichever one you want, just click on it. Like, be prepared. And then when you're talking to these investors, you have to have prepared and know all your numbers. Investors are looking for traction, right? So let me even go to the other side of the question. What are investors looking out for? At Ingressive Capital, we look out for a large range of things. So I'm just going to put the basic things, the industry standards. Number one, investors always look for traction. Now, traction could be in terms of revenue, could be in terms of the number of customers you have, could be in terms of the number of suppliers or partners you have signed up on your platform. You have to show that there's traction, there's growth. In December, you were here. In February, you are here, right? Very, very important. That way, the investor sees that you are growing, right? Secondly, your team is very, very important. The mistake I see founders make is try to replicate themselves in their team. That's such a big no-no. And investors see it. That's why investors ask, who is your team? How long have you known them? What value are they bringing to the company? Right? If you are very good in tech, you want to see that your co-founder is probably good in marketing or is good in operations, right? Your team is very, very important. Remember when I said that we're not just investing in the idea, we're also investing in the people. Investing is very, very, very important. What else are we looking out for? Want to see that you understand the markets that you're trying to build your product for, right? Are you trying to sell ice block to Alaska, people that live in Alaska, right? Is your business actually feasible? Does it even make sense in your local community? You want to understand that there is a customer for it. After saying that the product makes sense, there's a customer base for it, and a large customer base that is willing to pay for your products or service. What else? The regulatory landscape is very important, right? You saw what happened to the go-karters and the bike hailing platform in Lagos. You want to see that you understand the regulatory landscape and see that you are building your business in such a way that you can either circumvent these regulatory problems or protect yourself from that. What else? I mean, those are the basics for real. Then unit economics. How are you making money? Very, very important. Your business model. Every investor wants an ROI. Nobody's dashing you money. I mean, every investment comes at a cost. So we want to see that this business can make money, whether in the short term or in the long term. And here's the secret. People might not necessarily agree with me, but when you're initially pitching to people, show investors how they can make money in the short term. It's a very, very good convince her, if that's a word, right? Show them that you can make money in the short term. Yes, I know you have a long-term plan, and I know that it's not easy to really monetize new ideas, but if you don't, one of the best ways to convince an investor is to show him, this is how I'm going to make money in the short term while I plan for the long term.
Yeah, thank you so much,
So
Uwem.
that's the best.
So,
Yeah.
yeah, I mean, I like the point about showing investors how they can make money in the short term, even though you're looking at a long-term approach for your business. So I wanted to ask, do you invest in pre-seed or or seed stage, or maybe series A,
Yeah.
B, or C?
Okay,
What is
so
the
at Ingressive Capital, we invest in the pre-seed seed stage businesses. Now, interestingly, because of the amount of capital that is pouring into the African continent, pre-seed companies
yeah?
are raising so much money as much as the seed stage companies back in the days,
Mm-hmm.
right? But we invest in the pre-seed stage company, which means you have built out an MVP, right? And there's a validated market demand for whatever you're building out, right? You don't have to have the
Sorry,
most
Uwem,
perfect products. Yeah.
what's what's the MVP for for our audience? Maybe some of them might not know.
A minimum viable product, right? A product that
Okay.
you can take to the market. So in layman's terms, a, a, mo- the problem is I don't know the language. In designing, you say it's can't. In let's a product that is not perfect, right? That really depicts what you're trying to build, and also that customers can actually use to solve their problems. So say you are building out a skeletal product. Let me just call that a skeletal service
All right.
that kind of shows
Yeah.
what you're trying to build. That's an MVP. So and that means your business has gone from being an idea to something that is tangible, right? That people can feel, can touch, can experience.
Mm-hmm. And so Ingressive Capital focuses on seed, pre-seed and
Pre-seed
seed.
and seed stage. Yes,
All right.
but
Okay.
on the long run, so one of the value adds we give to our company that we invest in follow-on rounds. So let's say you invested in your seed stage and you're raising your Series A. We also invest, commit to you. Several reasons for doing that. We want to double down on our most successful companies, and we also want to retain ownership in those companies, right? So we also do sometimes invest in the Series A of the companies in our portfolio.
Okay. Thank you, Uwem. So in terms, you mentioned ownership, and so what type of because another thing is that sometimes founders are always skeptical about giving ownership to investors because they maybe because of maybe lack of trust or one thing or the other. So like, how do you make that arrangement with companies that you invest in?
Okay, this is a very interesting conversation. There are certain things I feel strongly about. Many people, like I
Mm-hmm.
said, will not agree with it, but from time immemorial, I'm always in support of the founders. I've been a founder, multiple founders, in short, with failed businesses and successful businesses. And I will tell you for a
Mm-hmm.
fact that any investor that is asking for more than 15% of you, in short, 12% does not like you, doesn't have your best interest at heart. At that early, because as you go on to raise and raise and raise more rounds, you will keep on being diluted. So what will remain for you if you give out so much at the early beginning? And
Mm-hmm.
I'm saying this because some weeks ago I spoke to a founder where a popular VC, I'm sorry I'm not going to mention names, but it was very disappointing because I respect them, requested
Yeah.
for 40% of their company next to me for investment. And I think that's outrageous, very outrageous. So at the early stage, and this is my advice to founders, try to keep whatever you're giving out to investors between 10 and 12%. You can
Mm-hmm.
extend it to 15%. At Ingressive Capital, um, we say we want to own 10%. We want to own 10% at the very early stage. Now, to the okay, and let me be very real with you.
Yeah.
Valuation and ownership is all about negotiation. It's all about
Mm-hmm.
how much you can negotiate. So if an investor says, I want to 10% of your company, I want to invest X amount based on your valuation for 10%, you can go back to him and say, sorry, no, this is my valuation. This money can only give you 2%. And trust me, if the investor believes in your business, he would invest, right? But at the end of the
Mm-hmm.
day, it's all about how you make a business case for yourself, all around about how you negotiate. At the end of the day, everything you do in life as a founder is negotiation. How do you show your value? How do you convince people to hop on your bandwagon, right? So yeah.
Yeah, very, very interesting, OM. I'm sure a lot of founders will be, looking out to the tips that you have provided. So, Janet, you want to chip in here? Anything that struck like an idea in your head based on what women has said?
Okay. So I understand you invest in early stage startups. So what if the startup doesn't succeed? How do you get your money back, or do you just let them go?
Very interesting and very tricky question. But we understand the risk of investing in very early stage companies, which is why a lot of VC firms and investors request for a lot of equity because it's a big risk, right? Many, to be honest, and there is no VC in the world or PE company in the world that doesn't have failed companies in their portfolio. And even on the African continent, it can be very tricky, right? More companies fail. So, but when the companies fail, you can't really do much, to be honest. You can encourage them to build another company. You can encourage them to pivot. There's a company in our portfolio that went from a pure software as a service company to a medical company. He pivoted. And interesting, it's not like the company was failing. His interest just changed with COVID, right? So we encourage them. That's why I said we don't run the businesses for them. We can advise you, we can help you, we don't run the business. But if the company fails, there's really nothing you can do. It's not a loan. So what we do is we encourage them to
All right.
instrument for investment is called typically instrument for investment is called the SIG, the Simple Agreement for Future Equity. And basically it's saying we're going to give you this money so that when you raise your next round, you're going to give us X amount in equity. It's not a loan. Like sometimes we do convertible notes. I'm not going to go into the mechanics of how we do things, but oftentimes it's a big risk. So that if the company fails, there's really nothing you can do because you're a loan. You're not a bank, right? We're not going to chase you down. Companies do fail, which is why we due diligence and ensure that the companies we're investing in will eventually succeed, right? So there's really nothing much we can do if the company fails.
Yeah. All right. So how do you? I have a question in question. How do you determine the valuation of the companies that you? Maybe it comes from the founders and the business itself sending maybe account statements, or what determines that? Because it's also quite important.
So the question of valuation can be a very tricky question, right? We often have different methods. You can use comparable pricing methods, like look at similar companies in the industry or similar market and say, if this company is valued at X, then your company should be valued at X. You can look at the future projections and say, if this company is making X amount of this thing at this time with X amount of customers, then they should be valued at, this thing. So, like I said, valuation. There are so many ways of doing valuation. At the end of the day, it's still in negotiation because we see very, very, very early stage companies being valued at, at exorbitant, amounts, and that's because you sometimes you factor in the founder, this second or third time founders, did their initial businesses succeed? If they did very well in initial businesses, that means they can come back and tell you, see, this my company is going to blow. So we are valuing ourselves at X amount. And so there are many methods to do this, right? I always tell founders, first of all, go do your research, learn the various ways that people, talk about valuation, and then decide which way you want to play, what method you want to use, and stick to it. But like I said, it's always a negotiation. There is no right way to do valuation. There's really no right way. Because at the end of the
Yes.
day,
One thing I'll pick
it's a mixture of numbers and sentiments.
Okay. Go ahead. Yeah, exactly. One thing I'll pick from this conversation and I capital is that you're very focused, you're very founder focused in taking it to the next level. Janet, do you want to come in here? Any questions?
No, I don't have any question.
You're on mute.
No, Janet just said she
All right,
didn't
all
have
right.
questions. You want Janet to ask me a question
So
about
yeah,
us?
Uwem, so basically, what would so what would be your tip for founders who are starting businesses, and how can they reach you, if to, get their business?
Um, for founders that are starting their business, please go out there and talk to the
Hello?
customers. Your business is. Can you hear me?
All right, okay.
Can you hear me?
Yeah, I can hear you.
Okay. For founders that are starting their business, please go out there and validate whatever you are building. You're not. I always tell them you're not building your business from your perspective. You're building your business from the customer perspective because you're building your business for the customer. So I know you see the problem. I know you have come up with a solution, but is the customer really interested in your solution? Is the customer really willing to pay for your solution? And start thinking about your brand from the very beginning, from the foundational stage. Um, very, very, very important because your brand will also determine how well you do. Yes, there's the product side. Build an amazing product. Very, very important. But also build a very good identifiable brand because your brand would actually speak to how far and well you would do as a company. So very, 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 very important. You see that companies that have succeeded in my ecosystem are companies that have understood the power of branding and building products that people want to identify with. I have mentioned a lot of them in the ecosystem from Paystack to Portal to Bamboo and all. Strong brand, Piggy Bank, Piggyvest, Cowrywise, strong brands, strong communities of people that advocate for them because they have a strong brand. Very customer-centric brands, so you have to be very customer-centric. Like I said earlier, you're building a business for the customers. You are listening to them. Your customer service is top-notch. One of the biggest problems on this side of the world is that customer service can be very shit. Unfortunately, maybe they took it from the banks or civil service. Customer service is core to your success. So start building all these things from the very beginning. Then build a good team. Your team is very, very important. The kind of people you surround yourself with will determine whether you're going to be listening to advice or you're just going to be coasting and building your business anyhow, right? So surround yourself with people that have complementary skills, skills that can plug the gap in your business. Network, go and meet people, engage with customers, engage with investors, whether they're going to invest in you or not, because their feedback would actually help you build something great. Um, that is my advice. And then apply to reach out to investors, pitch to them. I talked about how you can go about cold emailing or cold calling investors. For Ingressive Capital, you can either send me an email with your deck or you can apply on our website. You go to our website, investcapital.com, and click Founders Apply. You will get a form where you apply, which we literally review every week. And then you definitely will get feedback to say, hey, we want to move on to you, this doesn't really fit into what we're looking to invest at this time. Now, one last point I'd like to make, because an investor told you no now, doesn't mean that it's a no forever. I could tell you a no in December, and in February, the business looks interesting to me because there are many, many reasons.
What's it called?
Yeah,
It gets rejected. It should try again.
yeah. So a no is not the end of the world. A no is not that does not mean you should beef the investor or be angry or you don't feel adequate enough. Every investor goes. You see, investors are almost like entrepreneurs in the way that they are managing their funds and they're looking for the best way to allocate so that they can get return on investment. So if you get a no now, doesn't mean you always get a no forever. You get a no, ask what can I do better in terms of my pitch or in terms of my business? Advise me, right? You might try to be friends with them. It's invaluable the advice you get from an investor, or refer me to other investors within your circle that would be willing to invest in my business, right? How you handle feedback is so
Mhm.
important.
Yeah, really great points. When you for listeners and founders out there, you need to speak to your customers. Don't be stuck in your head. Um, start thinking about your brand. Build a team that is complementary. Network, be tenacious. Those are the tips I got from Uwem and the VP operations of Ingressive Capital. It's been a pleasure having a conversation with you, and really so much nuggets here. And I just say thank you. Have a great day, and God bless you.
Thank you, Tanya and Jeanette. Have a great day.
Yeah, it was a pleasure. Really good conversation. I really